Hello and welcome back to Bootleg Macro. This is an edition of our weekly chart review. We're going to start looking at the US stock market, specifically the SPY. We can see here on the weekly chart that we have made essentially a series of higher lows since the beginning of 2022. So here in what looks like April, looks like again in May, it looks like again here in August, again here in October, and then potentially here again in October of 2023. What we're looking at here in January of 2023, find ourselves at a very interesting place because the US stock market, specifically the SPY here, has done nothing but essentially chop back and forth since the middle of 2022. We're essentially at the exact same place that we were at in May of 2022 as we are in March of 2023. Now, looking over at the daily, what we can see looking more closely is that this 400 level has really been mostly a magnet for the stock market. It has gone a little bit above, it has gone a little bit below, but it essentially keeps coming back to this 400 level. So we would expect this to either be support or resistance as we look forward into the future, but we want to start taking a little look at what the sentiment is going to look like based on price action. And I'm going to go over to my weekly indicators specific for weekly sentiment, which is just below here. Scrolling down, what we see here on the weekly sentiment is that essentially it has followed what the stock market moves have done. If I scroll up so you can see it a little bit, we can see as we get this big push of bearish price action just at the end of 2021. We get a little push back up where we're getting bullish sentiment a little above 50 around the end of 2021. And then essentially what we begin is a major sell-off, essentially where bullish sentiment has fallen below 50%. What we're seeing then is essentially that the market can't sustain any bullish movement. It can't sustain the ups because it consistently wants to stay below 50% bullish price action. And when we look at where the market is today at the end of the past week, we're essentially at 51%, which means that we have a little bit of downside, we have a little bit of upside, but essentially what we're going to be expecting here is the wiggle around 400. We'll go ahead and keep scrolling down, look at the weekly volume. We can see here on the SPY, the volume has been essentially higher than it has ever been, especially considering where we were in 2020. At the beginning of 2022 here, we can see a humongous volume spike that essentially set the tone for everything post 2021. We see volume spiked here in October and September, and then we see we've got a recent volume spike in the past week. That was the SVB bank collapse. That was essentially the banking crisis that we are in the midst of currently still. So this would give us an indication that we could expect increased volume profiles on the weekly, which means that if we're looking at the daily, we're going to see some huge breakouts of volume. Now, scrolling over, looking at daily volume here, this is going back to July of 2022. We can see exactly what we were pointing out on the weekly here, this big blow off, essentially this middle finger of volume, which came out of nowhere relative to what we had seen in the previous few months. This is the week here. This is the SBV blow off. This is the middle of March where people were freaking out about a banking crisis. We see on the daily, we still have elevated volume levels, especially when we're looking at it from a trending perspective. The volume is increasing. That's not a great signal when you're thinking about if you want to see upside moves, because generally what you're going to want to see in an upside market or a bullish market is going to be low volatility and low volume. It's going to be a grind higher instead of what we see normally when it comes to selling, which is a waterfall or an elevator down. Now, scrolling down and looking at the price to volatility correlation here, what we can see is that the SPY volatility continues to fall and the correlation continues to fall. That would actually give us an indication that from a price perspective on the daily, we would expect upward moves at the moment, unless what we see is the correlation start to rise and go positive like it was back here when you had falling in February. So for now, what we'd expect at least to probably see a little bit of an upward bias. If we look at the weekly volatility here, what we can see essentially is that we have correlation, which is rising, we have volatility, which is falling. Not necessarily a great signal for the long-term trend, but does confirm what we're expecting since the beginning of 2022, which is generally a bearish bias. Now, the market loves to go up. That's the preferred method of the market, up and to the right. That's where the money is made. That's where the bonuses are paid. And that's where the IPOs get really laid out for the entire market to take. Right now, what we can see is that generally we would be expecting a downward move, but again, bearish counter trend rallies, which turn into bull rallies where you see 20, 30% in a month or 6 weeks or 2 months. That's the kind of stuff where you can get your account ripped up if you don't pay attention to the short-term wiggles of the daily price action. What I'm going to do here is take a quick look at what I view as the non-sentiment trade range. This is the weekly version of it. So essentially what you're thinking here is it's similar to like a Bollinger Band. You're going to take what is a probabilistic outcome of what price action you could expect using volatility for what size range you should have. So again, as I was mentioning earlier, you can see back in 2020 and 2021, we had essentially a very stable range here between the green line and the red line, with black being price. That's because when the market is in a bullish formation, volatility tends to fall because it just grinds higher. Where when we start to see these moves down, they get very jerky, the volatility blows out. Your wide ranges start to get essentially available as a probability of outcomes, where you can be up at 450 1 week, and then by the middle of 2 months from then, you can be down at 391. That's the type of action that you can expect. So even though we've gotten recent price action all the way up to 412, it looks like here at the beginning of February, we got very close to the top of its range. We could still expect extreme down moves, things that go below the green line, similar to what we saw here back in June of 2022, or what we essentially saw here in May of 2022, or at the very bottom like we saw in March of 2022. So as we see this, the volatility is essentially unwinding from where we were. It's actually falling, which when we look back up, it makes a lot of sense, because the blue line being volatility here is significantly lower than it was in the middle of 2022, when you see volatility going way above what looks like 20 here. Currently, volatility on the weekly is just around 12. So you can see that volatility is definitely coming down from where it was in 2022, but that doesn't mean volatility can't spike again. We'll go ahead and look at the daily non-sentiment. So the daily non-sentiment range, very similar to what we see when we just look at the traditional chart. Everything is essentially around that 400 line. Volatility is getting relatively tight here in this SPY. We've seen a little bit of movement off of this low at the very beginning of March. We're all the way up into the mid-90s, but again, it's not like we've gone anywhere. We were at 390 in February or in September of 2022. We started this period, we were at 394 in July of 2022. Essentially, it's been sideways action in the SPY and really gives us no indication of what direction to expect. We just have to use historical norms that the market generally wants to go up, but we have to pay attention to the signals of today, and that the volatility on the weekly and on the daily is showing that we can still see further downside. So just look for catalysts, pay attention to your stops, keep a close eye, and just always remember, the market can do whatever the market wants to do. It doesn't care what any of us want it to do or what we think it should do. The market's just going to do what it does.